You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
I'd like to take a little bit of a shift because, you know a lot about a lot of things, and we have half an hour to ask you many questions. I'm curious how you manage so many units.
I have always used property managers. When I first started, I was working 60, 70-hour weeks in my day job, and the only way I'd be able to do this is property managers. I also have investments, not just locally, but in Ontario, but I also have in Alberta and BC. And of course, there's no way that I would be able to manage those without property managers. I mean, I've even had investments years ago. I was part of a big project in New Zealand. Obviously, I wasn't going to be able to manage that one myself. Very cool.
So how do you vet them then?
The community is a big source for things. So when I went to go out to Alberta to invest in Alberta, I spoke with other investors in Alberta, and I got their recommendations for property managers, for lawyers, realtors, that sort of thing. And you get the referrals and the recommendations from other people that are in that market. And then, I flew out to Edmonton and I sat down with the property managers and asked them the questions that I had to get a feel for where they stood on on how to manage the buildings, and decided to go with them. I did the same thing when I decided to invest in BC. Interestingly, in BC, I actually, my brother was also buying some buildings in the same area in BC as well. After I went out there, he decided to go out there. So I took one property manager, my brother took the other one, just because that way we had the ability to compare and contrast.
That's awesome. That's like a great kind of a controlled experiment, right? Having different people. So with having this many, and you know what, like, I guess it's different with, what the rent owns and the amount of properties that we manage, because for the most part, the clients are taking care of day-to-day things, right? But when you have that many doors or that many properties and you are relying on property managers, what's one thing that, like we always say, trust but verify? So what's one thing that you can kind of, for a property manager, that maybe the ones that you've enjoyed working with versus the ones that you haven't, that just maybe kind of that intrinsic thing that you can only learn from experience, that you said, you know what, maybe ask them this question, or here's a tip, or I wish I would have said that, I would have known way before, that you can share with our listeners that's a good way? Because a lot of times when we're looking at scaling, we always want that property manager. And as we know, there's a lot out there. We have trusted partners within the REITE Club that are property managers and that we know they're good. But for those people that are going to new areas or places where, besides reaching out to the community, or maybe they don't have a good stronghold of that area, what's some kind of interview questions or kind of things that you do to kind of weed out the crappy ones? That's an easy thing for listeners to do.
So first and foremost, does that property manager also invest themselves? If the property manager is an investor, they already have an advantage because they know what it's like. So that definitely is the first one. The next thing I look for isn't something that I can see in advance too much, but is once I'm working with them, is to see what their reporting is coming back to me. I like when a property manager's reports are clear and they're concise, but they're detailed enough for me to get a really good idea of exactly what's going on in the projects, in the properties that they're managing for me. And that can be not just, so as an example, I don't want to just see that there was $1,000 a month that came in for rent and a $120 plumber's bill, and then their fee of $80, and then this is the amount that you get. Okay, but why did I get a plumber's bill? And what was going on? And do they scan in the receipts for the plumber so that you can actually see the receipt, the actual invoice from the plumber, so that you know exactly what was done, so that you can see that they're not necessarily upcharging. I don't mind if a property manager is upcharging, where the plumber's bill is $100 and they charge an extra 10% for them to organize having the plumber coming in. Some property managers do that. I don't mind if they're doing that as long as they're upfront about it and it's very clearly detailed in their reporting.
Yeah, absolutely. That's why you want to see the contract, or you want to understand what you're being charged for. Because some people will say, I'm like 5% or 4% or 6% or whatever that amount is. But then there might be some hidden fees behind the scenes. Or somebody could be 8, 9% monthly as a property manager, but there might be a lot more things included. How do you vet through all of that?
Again, as I said, it's a little bit of the getting a feel for what they, I hate to use the word feel, but I feel is what I go with a lot of times. There's the recommendations, as we talked about, from other people and the referrals from other people in the area. There's seeing what the reporting's like, touring the type of properties that they're with. So one of the things that I've done is I've gone to the different buildings that property manager manages for other clients to take a look at the buildings, take a look at how well they're maintained, take a look at the type of tenants that they're placing in those buildings to make sure that that actually fits what I envision my buildings being managed like.
That's a great piece of advice. I don't think I would have thought to specifically ask to go and see some buildings and potentially, I don't know, some units and the tenants that they're asking for. But
I've even gone and spoken to the tenants at other buildings that the property managers manage and ask the tenants what they thought of the property manager and why. Like if they had complaints about the property manager, what those complaints were and why they were complaining about them, why they thought that was bad. And that isn't necessarily a bad thing, because I, as an owner, might want my property manager to be the same thing. I mean, if the tenant's complaining that the property manager gives you an N4 the day after the rent is due, and they're complaining about that, saying the property manager is it's terrible because they're hard on you if you're late on your rent. Well, that might be something I want my property manager to do too. So even though when I talk to the tenant, they're complaining, to me, they're just reassuring me that I picked the right property manager.
Very true.
Yeah, I love that. It's almost like a little bit of an undercover. And I've heard tips as well too, like, some people that have had, large portfolios in lots of multis, is that they themselves or a spouse or a friend actually kind of goes undercover
shopping.
Yeah. And tries to apply to be a renter at another building, right? Where
I've done that as well.
Oh, wow. Okay. That's amazing, right? Because then you get to actually see their process in real life, not just what they're telling you, because they're going to tell you it's amazing and it's so great. The clients love it. But if you go through it yourself or have a friend or somebody with a different last name or something like that, go through that, you're able to see what's real, right? That's amazing tips, guys. And Mark, that's amazing. And I love how it just naturally comes out and you're like, yeah, just do that. But that is, guys, I don't know, like you said, you were investing when you were in university. So, I don't know, you're probably 21 now because you look so young but that's, guys, that's years of experience that you can, that comes with that by learning the wrong way, learning the things that you did the wrong way, but now gaining other people's
I've made my fair share of mistakes.
So that's a great segue. Maybe let's talk about one thing you should never do, or one thing that you've done. You're like, oh, I hated that I did that. And you know what? We know you're a modest guy. You're a successful guy, Mark. We don't want to, bring you back to the negative and be negative about all that stuff. But what's one kind of a common mistake that somebody that's looking into the multifamily world or currently investing in multifamily and want to scale, that's a common mistake that they make?
This isn't specific to multifamily, but just in general, is you really have to do your due diligence on everything, not just the property, but if you're going in, I mean, some of my biggest mistakes were as the money partner on other deals. So there was the first 18 unit building that I bought, I was the money partner. And it was a guy that I knew quite well. He brought the deal to me, and the initial budget for renovations was $250,000. We spent just over 1.3 million in renovations.
Wow, 1.3 yonies. I don't know, I'm not good at math, but that's like what, 6 times the budget?
There were a couple of cash calls. Yeah, yeah, a couple of pretty significant cash calls. But so, I mean, mistakes that were made there, obviously the renovation budget was nowhere close to what it should have been. And I mean, this was back at the time when I was working my 60, 70 hour weeks, and I simply trusted. I didn't double check that the renovation budget was accurate to go through everything. I was just, a deal came to me, said, okay, we're buying the building for $650,000. We're going to spend $250,000 on renovations, and then it'll be worth X when we're done.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.